Okay, this last question is a newcomer. We just got this one, so I'm going to talk a little bit off the cuff here. What types of Medicare Advantage plans are available in your area? All right, I talked about this before, and we've also got a permanent video about this up on our website, but it's a good refresher. I don't mind answering this. I can answer this every couple of years as things change. So there's two primary types of Medicare Advantage plans available in the areas that we sell: Ohio, West Virginia, Kentucky, and Michigan. The primary types of Medicare, first of all, Medicare Advantage plans are broken up into Medicare Advantage plans with prescription drug coverage and Medicare Advantage plans without prescription drug coverage. And I'll explain which ones there are as I go over them. Sorry, I'm still getting over a cold at the time I'm recording this, so I've got a little bit of a hoarse voice and a cough. I'll try to keep it as minimum as I can. The first and most popular type of Medicare Advantage plan available in the areas we work is an HMO MAPD plan. HMO is Health Maintenance Organization. The HMO plans means that you must use specific doctors and hospitals within the network to receive benefits, except in an emergency. If it's an emergency, you can go anywhere you want. Some HMOs require that you start off with a primary care doctor, and the primary care doctor refers you to specialists, but not everyone does. They can also, the HMO plans generally have lower premiums, lower deductibles, and lower copays than their competition. That isn't always the case, but that is generally the case. Now, the HMO MAPD plans are HMO Medicare Advantage plans with prescription drug coverage. If you choose, they're much less popular. There's HMO MA only plans, which are Medicare Advantage plans without prescription drug coverage, but an HMO network. If you choose one of those, you cannot add standalone prescription drug coverage. So if you choose a Medicare Advantage, if you choose an HMO MA only plan, you have to have some other kind of prescription drug coverage in place, or you will be seen as having refused Medicare Part D. That other coverage could be something like VA coverage, an employer benefit for prescriptions only, something like that. If you have that plan for 1 year, then the next year you decide to go to an HMO MAPD plan, Medicare will begin assessing a penalty on you if there was no other prescription drug coverage, because you did not have prescription drug coverage that year. So the HMO is the first type. The next type of plan is called a PPO. Before I go that, let me go back a step. There's also a HMO variant called an HMO POS plan. POS stands for point of service. I know what you were thinking, but it stands for point of service. That means that you're not required. Generally, the requirements on them are a little bit different, but they don't generally require that you start off at your primary care doctor before getting referrals. It could also mean that you could go to a doctor in lieu of going to your primary care doctor, but they still have to be part of the network to be covered. So you still have to go to all network doctors. PPO. There's PPO MA plans and PPO MAPD plans. The most popular, just like with HMO, are the PPO MAPD plans. PPO stands for Preferred Provider Organization. They mean that you can go to basically any doctor that takes Medicare in or out of network. They have to still agree to accept you if you're out of network, but you can see them. The insurance will work at a reduced rate. What do I mean by reduced rate? I mean that there could be a deductible before the insurance kicks in. It depends on the plan you're in and the year you're in, and the benefits for that year. But after the deductible is met, they will pay a reduced amount, meaning you will have higher cost sharing, higher copays, higher coinsurance if you go to a doctor that takes you and it's out of network. They also have the same rule for prescription drugs. So if you take a Ppo Mapd, then you're seeing as having the prescription drug plan. If you take a Ppo MA only, you're seeing as having refused prescription drug coverage for that year unless you've got other coverage that will work in its stead. If that's the case, and if that's not the case and you go to a plan with prescription drug coverage the next year, Medicare will assess a penalty on you for not having prescription drug coverage for 1 year if you take the MA only version of a PPO. Just like just like the HMO, if you choose a PPO plan and it's an emergency, you can go anywhere you need to go for the emergency and they'll treat it as in network. But the PPO does give you a little bit more flexibility than the HMO on a non-emergency basis. For us, it's a little more popular for people that have a whole bunch of doctors and they just can't find a doctor that is in network and for one reason or another has a Medicare Advantage plan. Or they live in a place where there are just not a lot of doctor options. They'll go into a PPO and just with the knowledge that they'll have more to pay for some of the doctors if they wind up leaving the network. Sometimes that's just an unavoidable consequence. For the most part, though, we do try to put our clients into HMO plans just because the relative costs to them wind up being lower, with the exchange being a little bit less freedom for doctors. I mean, honestly, if a person cares about freedom to go to any doctor they want, we're going to be talking to them about a supplement anyway. So a PPO is a far second place from a Medicare supplement, but that is an option that is there. But not everybody can get a Medicare supplement for one reason or another. The next option is called a private fee-for-service. Those plans were really popular a few years ago. They are less popular now for a number of reasons, but they're hanging around. They're still around. There are two types of private fee-for-service plans. There's a private fee-for-service with prescription drugs. There's a private fee-for-service without prescription drugs. But unlike HMO and PPO plans, if you take a private fee-for-service, by the way, it's abbreviated PFFS, so if I say PFFS, that's what I'm referring to, private fee-for-service. If you take a private fee-for-service without Medicare prescription drug coverage, in other words, MA only, PFFS-MA is how it's indicated on papers, you are allowed to then get a standalone prescription drug plan. And I do every year have one or two people, out of a couple thousand, I have one or two where that actually is the right choice for one reason or another. A person needs a specialized prescription drug plan. The private fee-for-service plan without the Medicare Advantage, without the Medicare prescription coverage built into the plan, is the right choice for them. You can also choose a private fee-for-service with prescription drug coverage, and if you do that, you must have that plan's prescription drug coverage, just like with the HMO or the PPO. You have to have, if prescription drug coverage is added into the plan, you get their prescription drug coverage. Now, the terms for it is a little bit different. They have a network. The network says that basically the network would work the same like the HMO or the PPO. You see someone in network, you're going to see the costs in the summary of benefits, what you can expect to pay. However, you can also use any doctor or any hospital anywhere in the plan's service area that agrees to accept the plan's terms and conditions. So if if the doctor is not part of the network, they have to assess whether or not they will agree to see you, and they do have right of refusal. Now, if they agree to see you, then that means that they also agree to accept that plan's terms and conditions of payment, and you will be assessed whatever the agreed upon copay is that you will be expected to pay. However, they do have the right of refusal on you if it's a private fee-for-service and they're not a part of the network. Before Medicare Advantage plans were built out, private fee-for-service plans, before HMO and PPO networks were built out, private fee-for-service plans were significantly more popular. They also were not as rare when they didn't have a network. It used to be you could see any doctor, any hospital in the plan's service area that agreed to accept the plan's terms and conditions. Once they started adding networks, then the ability to distinguish between an HMO or a PPO and the PFFS kind of went away. The biggest benefit between a PFFS and a PPO kind of seriously diminished. So they're around. It's a very niche product these days, but they're still advertised. There's only 1 or 2 companies in Ohio, West Virginia, and Kentucky that still have them. Now, those are the 3 primary types of Medicare Advantage plans. I'm just going to touch on one other. There's some other types of plans called a cost 1876 plans. I've never seen one. They're not around in this state. They're in a couple other states, but even then they're kind of nebulous, so talk to somebody else if you ever see them available. The only other one that's kind of available, and there's only one company offering it in the states that I represent right now, is called an MSA plan. Now, the MSA is a different acronym than what it stands for people under 65. For over 65, it stands for Medicare Savings Account. That is a Medicare. The acronym is MSA/MA. Now, you'll notice I didn't say MAPD. Medicare savings accounts are Medicare Advantage plans without prescription drug coverage, but you then can go ahead and get a standalone prescription drug plan to go along with it. Now, this is actually a suitable plan for a number of people, and I have talked to a number of people this past year about it. Some took it, some didn't, because it didn't turn out to be right for them, or they were uncomfortable with the terms. But this plan actually is right for the right kind of person. Again, there's no one silver bullet for everybody. An MSA plan gives you a bank account they put money into. You can't, but they can. Each year they will deposit a series of funds into an account which you then control. You can use that money to pay the deductible on that plan. I'll get to that deductible in a second. The deductible is usually higher than the amount that's deposited, but during the time that you've got the plan, you can use that money to pay, or you can choose to use your own money to pay for during the deductible period. Now, here's what happens. It is basically the equivalent of a high deductible medical plan. You can use it for any doctor, any hospital, anywhere in the United States that takes Medicare. You build the plan directly, but the plan will use Medicare's amounts. So it's a lot like a Medicare supplement, which have the same terms. There's no network, which makes it ideal for people who travel. But it does have a high deductible to it. We're talking thousands of dollars. You have a percentage left over to pay. You can choose to pay for it with the amount that is deposited into your account, or you can choose to bank up that money and use your own money, because you'll most likely, if you use it up, you'll still have something left over. Each year, if you continue to stay in that account, the deposited amount will accumulate. So they'll deposit next year's amount into that account as well. You get a Visa card or a MasterCard, something like that, to pay for it. But if there's money left over, it's still yours to use for approved health copays. So you could conceivably bank up enough money where you wouldn't have anything to pay that year. And it still gives you the flexibility of having your own prescription drug plan and the flexibility of going to any doctor that you want to go to. There are positives to this account. There are negatives to this account too. The biggest negative is the the Medicare Advantage plan, the MSA plan, pays nothing for you until that deductible is met. All it's doing is knocking down Medicare's approved amounts. But if you hit that maximum deductible, they pay everything. It's like a under 65 high deductible health savings account. So this plan, if you're going to hit that maximum out of pocket and you think you're going to be skyrocketing past it, as a Medicare Advantage plan, it actually is it can be a good deal, especially since if you're going to skyrocket past the deductible, there's a good chance you'd skyrocket past the maximum out of pocket on a regular Medicare Advantage plan anyway. And it has the additional benefit of no network. And the additional benefit of you get to find a prescription drug plan that is going to be suitable for your needs. It's the disadvantages to it. There's a couple. Number one, it doesn't have most of the special election periods that regular Medicare Advantage plan does. And what that means is that most Medicare Advantage plans you can get in the middle of the year for special circumstances. Most of those special circumstances do not apply at the time of this recording. The rules don't allow it for Medicare Advantage. If you're getting a low-income subsidy, you can't get a Medicare savings account. You're ineligible. As another reason. The other thing is they are not very common. Therefore, the Medicare savings accounts that I've seen have to have, basically, I have to really, really instruct the clients getting them into how they tell their doctors. They have to educate their doctors how to bill for this plan just because they're so not used to seeing it. It is common. Every Medicare savings account that I've seen, they pretty much say, look, have the client, if there's an issue, have the client or the medical provider call our office. We will instruct them step by step. I do the same thing with the couple people that I've got in Medicare savings accounts. I do talk to more people about them, but these difficulties are big stumbling blocks. And there are people that should take it but choose not to and would basically take the second choice we'd recommend for them if they didn't like it, if they either wanted to or needed to move away from the plan that they had. And we recommend it as a first choice of Medicare savings account. It's something it can turn people off. So you've got to be prepared to be doing a little bit of work on your end for those Medicare savings accounts. But that's the only other kind of plan available. Maybe on another Q&A, I'm sure I'll get a question about Medicare savings accounts when these videos come out, when this video comes out. If people want to ask, I'll be glad to go into more detail about them. But those are pretty much it for the type of Medicare Advantage plans around, at least at this time. Some states may have a few other options. That's pretty much all there is in terms of the states that I represent: Ohio, West Virginia, Kentucky, Michigan. So if you've got any questions, please shoot us an email, leave the question on Facebook, comment on Facebook, comment on YouTube, put a question on YouTube, Facebook. Subscribe to our newsletter. We're going to be coming out with that one day, and we would like to have people reading it once we come out with some data. And check us out on LinkedIn as well, and subscribe to this channel. Be sure to check us out. Check out the bite that will come out with this afterwards. For the people that don't want to listen to me talk for about 20 minutes, we'll get you something a little bit easier to understand. We'll see you next time.